Hello and welcome to Charting the Markets. You're with me, Sean Mearson, Senior Market Analyst at IG South Africa. In today's economic calendar, we do have some more inflation data coming out of the US in the form of PPI data, as well as that weekly unemployment claims. But markets are still running on yesterday's CPI data, which came in much better than expected. Looking at some charts, we can see that better than expected CPI data reflecting in the US dollar. Obviously, weak inflation or disinflation, suggesting we could be nearing the top of that monetary tightening cycle and presenting some risk on trade at this point in time. So looking at that dollar index, we can see that it has respected this 200-day simple moving average, which was the suggestion that the longer-term trend is down. We saw this bearish price reversal off a confluence of this 103.15 level, as well as that 200-day simple moving average, the blue line on our chart. And now we have continued to extend that downtrend. We've broken through support at 101.85. We've now breaking support at, well, we've broken support at 100.50 with that next downside target at 99.20. That's for the dollar index. Now, this move lower is starting to put the dollar into oversold territory. And so while we do expect a little bit more downside, we are setting up for a possible rebound. Traders are respecting that longer-term trend. They wouldn't look at trying to pick a bottom and looking for long positions into a rebound, but rather waiting for, if we do have a rebound, for that strength to play out and end with a bearish price reversal at one of our levels. They would look to re-enter short positions on the dollar index. The euro dollar, as you would expect, showing the inverse there of what we saw on the dollar index. Obviously, the dollar index does have quite a strong weighting of the euro in its calculation. Now, we've had this grind back, this bit of a pullback, which ended with this bullish price reversal. We've now taken out the high at 1.099, broken through that, broken resistance at 1.1065, and now we are moving to test our next level of resistance, sitting at about 1.1180. Now, if we zoom out a little bit here, we can get through that 1.180 level. We're probably looking at about 1.1305 odd on the way up. But traders would be wary of what we see, which is now the currency pair moving into overbought territory. And so preference here is respecting that longer term trend, not trying to pick a top, but waiting for any type of weakness to start manifesting, or even a sideways consolidation could move that euro dollar out of oversold territory. But we'd wait for that consolidation or pullback before looking for a new long entry into the euro dollar. Cable, similar picture. We have that long-term trend that is up, so that's favoring pound strength versus dollar weakness. And dollar is weakening against a broad base of currencies at this point in time. We've had a bullish price reversal, ending this pullback here, which is just below that 1.2665 mark. We've broken above that 1.2750 mark, and now we're taking out our next level of resistance at 1.2965. So further on the upside, we can start looking towards possible move longer term and that 1.3270 mark. Now, if you are trading that currency pair and you're not already long, if you are long, you might want to keep trailing that stop loss and a close below a one-day low. Alternatively, looking for new long entries, you might consider waiting for a pullback from overbought territory, or at least a consolidation or a pause in this move higher before setting up new positions on cable. Moving over to some indices now. And starting with the S&P 500. Now, the S&P 500 is in that longer term uptrend, and our preferred approach to that has been to buy each new pullback from each new high. That has worked out quite well over the last little bit. We've had a strong move up, we've had a pullback that ended with circled black. We see that bullish price reversal, a break of that high, move to a new high, and that ended with an intraday price reversal, circled black here again. And now we are extending that move higher. 4,510 is that next upside target there. If we can get a close above that, then we start looking possibly even 4,630. Now, if you are long, you might want to consider trailing a stop below a one-day low, or maybe even at 4,460 level. Because as we start moving into new high territory, we need to be wary that we are now looking quite extended on the way up, and we are in overbought territory. Again, it doesn't mean that we pick a top. We don't try and trade against that trend, but we do. But it does mean that the market could correct or pull back, and that might provide a new opportunity to find long entry into something like the S&P or into the S&P on this chart to join that longer-term uptrend. When we look at the DAX, that long-term trend is also up, which we've been saying for the last few weeks, but over the short to medium term, we've been trading within a broad range. Now, we've had a reversal. We broke this 15,715 level, but we have had a reversal off that 15,485 level. We've had a move above 15,715, and now we are targeting a move back towards 16,330. Probably you could consider a resistance target here, sitting about 16,220 odd, this recent high here. But that target is 16,330. And again, if you are long, you might consider having a trading stop on a close below a one-day low. These are obviously all daily charts that we're looking at today. And if you're not looking for new entries, then you might want to see the market start to pull back first and settle at one of our support levels before finding new positions onto the DAX. FTSE 100 long-term picture has been different to what we saw on the S&P 500 and the DAX 40, in that we've considered this to be a broad sideways trend longer term on that index. And how we gauge that is we see the price whipsawing back and forth through that 200-day simple moving average, the blue line on our chart. And the fact that that moving average is also just pointing sideways, showing that it's not really a committed long-term direction. So we say this is more of a range-bound trading environment. So we're looking at trading off the levels. Since last we spoke, we've had a bearish reversal off that 7,560 level. Then we've had a break of support. So in range-bound environments, we look at trading between levels. We're looking at breaks of levels. Before that, we've had our reversal off that level. We've hit our target on the 7,410 level. We've broken below that. This one would have been hard on the breakout side because it was such an aggressive move lower. We actually did break what we thought was a major low, that's 7,285. Now, what the price has respected is this intraday low at 7,200. And so this level's turned out to be a false break, and we have rallied back up. We've had a reversal and we've rallied up. The reversal coming off 7,200. And now we're back above 7,410. And that targets a move back towards 7,560. In this situation, having a stop loss below a one-day low, if you are long, might be a consideration for that. And then we'd see how it approaches that 7,560 level. Now, if we get we'd be either looking for a break or reversal off of that, determine whether new short positions or long positions would be entered on that. But we are still rebounding from oversold territory, and we have taken out the 7,400 level, which does target a move to 7,560 for the FTSE 100. Moving over to some commodities, starting off with Brent crude. Now we are testing resistance of both that 200-day simple moving average and the 80-80 level. 80-80 level just sitting slightly above that 200-day simple moving average, which is probably sitting where we are currently, about $80-20 per barrel on Brent crude. Now, for a long time, we've been talking about the long-term trend for Brent crude being down, despite the short to medium-term range-bound environment. In respect to that longer-term trend, we've been looking for long entries, and when the market looks like it's rebounding, we're waiting for that rebound to end, that strength to play out. Now, this could change our bias to trades on Brent crude, a move above both this 200-day simple moving average and that 80-80 level. That would suggest that that longer-term downtrend has been broken, but it does not immediately assume a new uptrend in place. I think what it considers is a longer-term sideways range-bound price environment for Brent crude until such time we start taking out major highs here and that major high being at about 89.90. But if we do get a breakout, we'd be targeting levels up. You can probably look at about $84 a barrel on the next upside, and then possibly 87.70. If this level doesn't hold, we'd like to see a bearish reversal. And what would constitute a bearish reversal? Well, is this today's candle, which is obviously a small-bodied candle at this stage of time in the day. But this candle moving red and closing at least below the halfway mark of that preceding candle. But preferably, we'd like to see that the price starting to move below that 78.50 level. In that scenario, we start targeting move back down towards $75.10 per barrel. And if you do get that, you can look at that reversal high, close above that as a stop loss indication for that. We are overbought at this stage in time, so if we do get a bearish reversal, you'd like to see that overbought signal. This indicator just moving back below that 80 mark as a confirmation that that reversal is in place. But we're waiting right now, sitting on the hands, waiting to see how we go about treating this 88 level and that 200-day simple moving average. Now, gold has started to renew that longer-term uptrend, does have an inverse relationship with movements in the dollar. We found support on that 200-day simple moving average. So that longer-term trend was tested, but it did hold up. We're using this black trend line as a wait for some short-term reversal. We have had a break above that. We have moved to the $1,945 per ounce mark, and we have closed above that. Now, close above that, it is targeting a move up to 1,980. And so we're obviously still keeping a long bias to trades on gold in lieu of that longer-term uptrend. And we've had our reversal, we've had a breakout, so we're targeting that next level. Now, this trades are long, this having a stop loss below that one-day low might be quite a bit of a distance. Might want to consider having a stop loss below close of that $1,945 per ounce mark, just to manage that risk relative to reward on gold. Platinum sitting in a long-term sideways range-bound environment as well, and so looking at trading off the levels. That sideways environment dictated by the price whipsawing through that moving average once again, so no clear long-term direction for platinum, and that provides a different type of environment for trading, which is a range-bound trading environment. And we have had short to medium term move lower. That has ended with this W shaped, which is the double bottom, suggesting the end of this move lower and a short term move higher. We've had a break above 940, and we are targeting a move to 980 now on the upside. I think if you are long on that, then maybe having a close below $940 an ounce might be a stop loss consideration. Really depending on your threshold for risk. Right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa, and thanks very much for watching.